All right.
Yes. Yep.
All right. Thank you, guys. Welcome. Good morning, everyone. Welcome to our first-time homebuyers program for the real estate professional. We have a lot of great information today. I just want to let you know the industry affiliates and the Diversity, Equity, and Inclusion Committee are working together to educate our membership to promote home buying equality. Today's program is going to be a great opportunity for you to learn about the various first-time homebuyer programs offered through Mass Housing and the Massachusetts Housing Partnership, also known as MHP. So we will use that MHP throughout the seminar. This information will be critical in providing buyers with options that will ultimately empower them to be competitive in this market. I'd like to open up and welcome Melvin Vieira, our President 2021 President-elect, and he's the chairman of the Diversity, Equity, and Inclusion Committee for GBAR. Welcome, Melvin. Good morning.
Good morning, Dino. Thank you very, very much for bringing me on. And it's a pleasure to be on this panel with some very distinguished men and women, and I appreciate it, that have some great knowledge about this industry. And I have to say that I've had the honor to work with a few of them on this panel in the past, in my 30 years of the business. And I just want to say that being that the chair of the Diversity, Equity, Inclusion Committee, we're also proud to present this with the industry affiliates, and why and how the first-time homebuyer program was developed in a direct result of the discrimination. And also, we now know promoting equality is really important. We also understand that we need to change as GBAR, starting to promote more programs to educate our members and the change in the culture. Thing is that while discrimination in housing is now illegal, and it wasn't always that in effect, the fact the structure of the program had implicit biases continuing to adverse affect the African-American, Black community, and other minorities and abilities to achieve home ownership. You know, there's not such a proud moment to say that our trade industry, the National Association of Realtors, was working in tandem with the federal, state, and local governments to prevent home ownership for Black and Brown people in specific neighborhoods. And specifically, NAR predecessors organizing and codified the real estate industry in opposition and integrity and integration, the 1924 Code of Ethics, supporting redlining and radical restrictive covenants, and which opposed the 1968 Fair Housing Act. But the thing is, we've come a long way, and that's why we're here today. Sadly, more than 50 years ago, a patch of the Fair Housing Act, you know, it still remains a 30% of the home ownership gap between Blacks and whites. And the same disparity was back then in 1968, and that's a historic thing. We realized that, you know, home buyer should be equal, and it should remain that way. We also realized that home ownership rate right now for the non-white, Hispanic, Blacks, 64%, okay? And it goes not to us, of being of people of color. And the sad part about it is the home ownership rate, you know, for African Americans is 42%, while the Asian is 60% and Hispanic is 48%. In Massachusetts, less than 1/3 of Black households can afford to buy a home, according to these studies. That is one reason why we've come together and gotten this program and brought it to you, because we realize that we need to go ahead and create equality amongst all of us. And everybody has the right to be able to buy a home or sell a home. We understand that there are a lot of things that have happened. And the good thing is we can always say this, and this is the great thing about the National Association of Realtors, has realized that we've made mistakes and we have revised the code of ethics, okay, and requires all us as professionals in a professional service to not discriminate against anybody in regards to race, color, religion, handicap, familial status, national origin, sexual orientation, or any other gender. Also, last year, the National Association of Realtors introduced its Fair Housing Haven, okay, which is a housing simulator that helps implicit buyer training to address the practices that have been going on. Well, this session today, okay, is building the future of GBAR. We plan to do other things such like this moving forward. In April, okay, we're doing a webinar which is entitled Demystifying Rental Vouchers and Residential Assistance Programs on March 25th. This will specifically address the Section 8 voucher program in the rental program for Massachusetts. Also, we'll be talking about the RAF program, the Rental Assistant and Families Transition Program. We'll also be doing what we call on our Manageable Mondays. We'll be doing a fair housing program, okay, for the city of Boston, and talking with the commission and trainer on April 12th. Also, we'll be doing one other beautiful thing, the Way Home Fair Housing Course with realtors and the National Real Estate Trainer, Paula Montfort, on April 21st. So we look forward to you joining us throughout these programs and doing these programs that we're moving forward with and helping you as the realtor educate. And I want to thank you very much and look forward to helping you. And Dino, thank you very much for bringing me on. And I'm here to answer any questions, but we have some great distinguished panelists here that will help us out.
Thanks, Melvin. Appreciate it. That was a great introduction. I really appreciate it. Really important subject matter. I'd like to transition over to Andrea Alessandro. I have to admit, Caddick is one of my favorite title companies. I use them a ton. And so Andrea Alessandro brought this idea to us last year. She's an amazing woman, and we appreciate having her being part of GBAR. Unfortunately, the pandemic got in the way, and here we are. So Andrea is the Director of Industry Relations and Education at Caddick. She was 2020 Industry Affiliate Member of the Year, which is pretty significant. And we do, again, appreciate everything that Caddick does with us. We love this partnership, so thank you. Then stage is yours.
Well, thanks so much for that kind introduction, Dino. I really appreciate that. And yes, want to welcome and thank everyone for attending today's event and giving special appreciation to Jen at GBAR and her commitment to making sure that this program made it on the calendar. Caddick, GBAR, and Mass Housing had planned to deliver this course in person in March of 2020, so that even though COVID delayed us, we were determined to make it happen because it was just that important to all of us. So I am so inspired by Melvin's passion and the reason why this was so important to us, and to just sort of piggyback on what he was sharing, was that in June of 2020, the National Association of Realtors Chief Economist, Dr. Lawrence Yun, presented a 5-point strategy on how to close the gap in home ownership rates between whites and African Americans. And one of those strategies was to increase access to down payment assistance. Dr. Yun noted that saving for a down payment can be the biggest hurdle for renters wanting to become homeowners. In recent years, a growing number of first-time homebuyers received help from family members with their down payments. However, due to historical gaps in accessing and accumulating wealth, it's much more difficult for African Americans to obtain substantial financial assistance from family members. Therefore, increased access to federal down payment assistance based on certain income thresholds is vital, particularly for African Americans. So that's why today's program is so important to Caddick to sponsor and support. After the killing of George Floyd and the Black Lives Matter movement during the summer of 2020, a group of employees and senior leadership from Caddick created an employee-led social justice committee to research and explore how Caddick can use its financial and human resources to improve minority home ownership. That group is called the Initiative by Caddick, and I'm proud to say that Caddick's senior management team asked me to be the co-chair of that initiative. And so to demonstrate Caddick's commitment to improving minority home ownership, we have a discount on owner's title insurance for all first-time home buyers. Caddick is an annual sponsor of GBAR. I've been an affiliate member for years. So if anyone has any questions about that discount program after this event, please feel free to reach out to me for more information. So a true warm thanks to everyone at GBAR and today's speakers for coming today and coming together to make sure that this important webinar was made possible. Thank you.
Thank you, Andrea. Great introduction, appreciate it. I'd like to transition over to Mass Housing. We have two representatives here today. Proud to have Natasha Boy and Angelo Newby. They will be presenting on behalf of Mass Housing today. Mass Housing is a quasi-public agency created and charged to provide financing for affordable housing in Massachusetts. Natasha Boy, Esquire, is a relationship manager at Mass Housing. In that role, she works closely with the agency's lender partners, consumers, and nonprofit agencies. She has several years of experience in the mortgage and real estate industry. Some of her previous work includes her roles as processor, loan officer, and real estate legal associate. Natasha, would you like to say some words?
I believe Angela was going to say a
Oh,
little
okay.
bit.
I'll introduce Angelo then. So Angelo is a senior relationship manager at Mass Housing. His primary objectives are to reach out to underserved markets, enhance financial education, and increase minority lending. Angelo has over 35 years of mortgage and retail banking experience. Thank you, Angelo.
Well, good morning, and thank you to GBAR for allowing us and inviting us to participate this morning and present some material to you, to the membership, as we are members also. And it's thanks especially to Jen for putting this together and for the sponsors. As you mentioned, Dino, Mass Housing is a quasi-public housing finance agency, and our primary job is to work with first-time home buyers across the Commonwealth. That's not all that we do, but for Natasha and myself, we are out there on a daily basis building teams, and those teams include the realtors, they include the title insurance, the attorneys who close the loans, the lenders, the nonprofits, and the municipalities. And what we do is work as a team and putting together the best programs for first-time home buyers, especially across the Commonwealth, to give them an opportunity to buy a home, but also partake in the resources that are available to help them bridge those gaps. We're working in those underserved communities. We're working in those communities where people have not had a chance to touch the American dream, and we'll continue to do that with the programs that we offer. These are resources for down payment and closing cost assistance, low and no money down in some cases, the purchase of multifamilies, and the opportunity is great. The resources are there now. We've got great partners. We've got great team building, and we want to make sure that these first-time home buyers have the best opportunity and the best resources available. So Natasha is actually going to take us through the presentation today, and there's a lot of information, and we know we're not going to be able to touch on everything, but we want to make sure that the membership is aware of resources that are available out there, and that we consider GBAR a great partner, and we're here to assist in any way we can.
Great. Well, good morning, everyone. Thanks for that introduction, Dino, and to you, Angelo. So again, my name is Natasha Boyd, and I'm a member of Mass Housing's business development team. I am truly excited to be with you here this morning. This is because in my role as a business development officer, on a daily basis, I usually interact with consumers and lenders. I don't get that many opportunities to be in front of an audience full of real estate professionals, I should say. But I believe that the real estate professionals like yourselves play a very integral role in the success of Mass Housing. We do form a winning partnership for first-time home buyers. So whether you are a whether you are a listing agent that is being offered a pre-approval with a Mass Housing down payment assistance loan, or you are the buyer's agent that is doing the presenting, my hope this morning is that you will leave this session with a reinforced confidence that not only is Mass Housing a Mass Housing loan like any other conventional loan, but that a Mass Housing program is a safe, affordable, and a very valuable resource for your buyers, especially those that are looking for some assistance in buying the home. So now I'm going to go ahead and share my screen. I'm waiting for access to share my screen. I'm sorry, can the host please allow me to share the screens with the PowerPoint? Okay, perfect. I got it right now. Just a minute. Okay, I think we are in business now. So I'm going to take you through some of the highlights of the mass housing program, especially with the down payment options that we have for first-time home buyers. Now, as I was saying, I believe that we form a very winning partnership for first-time home buyers. Now, a mass housing loan provides an increased buying power for the borrower because of the options we have for the down payment assistance. It also provides an increased peace of mind. Mass Housing is also a mortgage insurance company, and we have some very great incentives for our borrowers. Now, we have what is called the MIPlus, or the Mortgage Protection Plan. This is where Mass Housing actually steps in and pays up to 6 months of a borrower's principal and interest if they lose their job. We also provide an increased confidence for the borrower because we have mortgage experts. So at any point during the process of the home buying journey, a client or a borrower can call Mass Housing and ask any questions that they have to guide them along. Lastly, because we are also local, we actually service our loan through the life of the loan. So we are not selling the loans to a different servicer. So for the life of the loan, the borrower can always reach out to Mass Housing through our 617, we are local, so they can call our local number. We actually do have borrowers actually come into the office. We are located downtown Boston, so we are accessible to them. And it gives them the confidence to know that we are not only leading them to purchase the home, but we are helping them along the line to sustain the mortgage also. So this is the page showing the suite of products that we have at Mass Housing. We have the Workforce Advantage 2.0. It is new. We just rolled it out October of last year. We also have the First-Time Home Buyer Conventional, Mass Housing Mortgage Conventional, and the Operation Welcome Home Loan. We also have what I call a sensible Mass Housing FHA loan, and I will go over all this in much details on later slides. But I want to start with some requirements for Mass Housing. With our loans, the borrower cannot own any property at the time they close on a Mass Housing loan. So if they already have a home that they hope to, or they are hoping to retain, they won't qualify for a Mass Housing loan, because all our loans are supposed to be owner occupied also. The borrower must also meet our income and underwriting requirements. And to qualify for the down payment assistance program, they must be a first-time home buyer, which we define as someone that has not owned a property within the past 3 years. So the first program we're going to talk about is the Workforce Advantage. As I mentioned, it was rolled out October of last year. It is for purchase transactions. And actually, I'm going to tailor my presentation only on our purchase transactions that we offer. We do refinancings too, but I will keep it to the purchase transactions. So the Workforce Advantage is for purchase transactions only. It is for first-time home buyers that are buying either a single family, a condo, or a 2-unit. Now, with Mass Housing, the Workforce Advantage is the only program we have that actually qualifies the borrower based on the household. With all our other programs, it's based on the applicant's income. On a later slide, again, I will show you what the income for this Workforce Advantage looks like. But the features of the Workforce Advantage is that it comes at a deeper discounted interest rate. There is a down payment assistance. It's at a 0% and is deferred until the borrower either sells their house or refinances their home. There is also a lender-paid single mortgage insurance that is paid by Mass Housing. I'm sure we are all aware that when you're buying a house and you're putting down less than 20%, it comes with mortgage insurance. On this very product, Mass Housing is picking the tab for the borrower. So the borrower is not paying any mortgage insurance. The mortgage insurance is being paid by Mass Housing. And this program is also available statewide. So I was talking about what the income looks like. On this slide, on the top column, you see that it's numbered from 1 to 8. This is denoting the household size. And if you were looking on the left-hand side, it's broken down by county, and it's usually, or I should say, it is the county in which the property is located. It's not necessarily where the borrower lives, but where they are hoping to buy. So in the interest of time, I'm not going to go over everything, but I'm going to go to the next slide, which shows the income for the counties of Middlesex, Nantucket, and goes all the way down to Worcester County. So if the borrower, for example, is buying in Framingham is in Middlesex County. For a single person, that income is at $67,400. If it's 2 people, it's going to be $77,000. Now, if it's a couple with 2 kids, that is now a household size of 4, and the income cap is then $96,250. So this is how it looks like for a borrower under the Workforce Advantage and how the income will be calculated. So I already mentioned this, but it's worth noting that the down payment assistance is going to be broken down in 2 different down payment assistance. So if the borrower is buying in what is known as a gateway city, they get 5% of the sales price or $25,000, whichever is less. Now, if they are buying in a non-gateway city, it's going to be 5% of the sales price or $15,000, whichever is less. Now, for the benefit of those that are not familiar with what the gateway cities are, these are cities that used to be very vibrant and had a very robust economy. But things have faltered because of where we are. And so it is our hope or our intention to try to infuse more incentives into these communities to help revitalize these cities so that we give more incentive to people that are looking to buy. Of course, these usually are urban cities, and that's where a lot of Black or brown people are. So we're trying to incentivize them or incentivize more people to move into these cities. So again, if they are buying in a gateway city, the significance of that is they get up to $25,000, whether they're buying a single family, a condo, or a 2-unit. Again, the term of this loan is at a 0%, and there's no payments due to the borrower until they decide to either sell their house or refinance their house. So this is the map of the state. Now, we have highlighted where the gateway cities are. So if you have a buyer who is trying to be strategic because they want to get that $25,000, these are the communities, and it shows you where they are and juxtaposing to other cities. So you can use this if it helps for your buyer when they're deciding to use mass housing or when they're deciding to buy. So the next program I'm going over now is the first-time home buyer conventional. Now, as I mentioned, with mass housing, with all our programs, there are different income limits. And the income limits are usually broken down by county. And again, it's the county in which the borrower is looking to purchase. So if you take a look at the left-hand side grid, you would notice that Plymouth County has a cap of $113,300. So does Suffolk County. But you want to be careful because not all the counties have the same income. So for example, if you look at the bottom of the page, Worcester County has a cap of $101,200. So you want to be very conscientious when you are looking at the income for where the property is located. Now, the first-time home buyer conventional product also comes with a down payment assistance. The down payment assistance is going to be 5% of the purchase price or $15,000, whichever is less. Now, the difference between this and the Workforce Advantage that I just went over is that with the Workforce Advantage, I mentioned that there was no payments due. The payment is deferred. However, under the first-time home buyer program, the second loan comes at a 2% interest rate. It's fully amortized for 15 years. And the balance on that is due either upon sale or refinancing. However, there is going to be a monthly payment that the borrower will need to make. So they are going to be receiving 2 statements. One is going to be for the larger loan, maybe 95% loan to value, and there's going to be a smaller loan of 5%. This 5% smaller loan is what I'm saying comes at an interest rate of 2%. And what's going to happen is that the principal and interest due will be due on every month, and the borrower is going to make the payments alongside the first mortgage. Now, after they have the loan, if they choose to sign up for the ACH, they can do that so that it comes out directly from their checking account. The other great thing about the first-time home buyer is that it is applicable for anything from a single family condo to a 4-unit. The workforce advantage only goes to 2-unit, but for the first-time home buyer conventional product, it goes anywhere from a single family to a 4-family. Now I moved to the mass housing mortgage conventional, which has a higher income. Again, as if you've cut what's going on with each program, as it progresses, the income also increases. So if you took a look at the income limit sheet on the left-hand side, again, going back to, let's say, a Middlesex County, that cap is $153,900. If you go to Suffolk County, it's $153,900. Now, originally, this mass housing conventional is our standard loan program. This is usually used for repeat buyers. So for someone that owned a house, has sold it within the past 3 years, and is now looking for a mass housing mortgage, because they've owned within the past 3 years, they won't qualify as a first-time home buyer. And so the mass housing mortgage conventional is what we will use as an option for a person like that. However, what we have done under this program is that we have carved out a special provision or exception for first-time home buyers that are buying in a gateway city, but whose income exceeds the income under the first-time home buyer conventional program. On a later slide, I have an example and it will make a lot of sense to you, but right now just know that there are different income for each of our products, and it depends on the borrower's income and household size. So the next program is the Operation Welcome Home Loan. Many call this product the mass housing VA loan. In actuality, it has nothing to do with VA at all. What we did at Mass Housing is took a look at what VA was offering, and we created a program around that. So of course, it is for people in the active in the military. It's also for veterans. It's also for reservists or National Guards. Now, they also get the down payment assistance of 5% or $15,000. On top of that, we also give them $2,500 for closing cost credit. Now, one of the great features of this program is that we allow for non-spouse co-borrower. If you're familiar with how VA works, the veteran or the military person cannot buy with someone who was not a spouse. With our program, we do allow for non-spouse co-borrower. And by the way, we define non-spouse co-borrower as any other person who is also a first-time home buyer and intends to occupy the property as their primary residence. For that reason, we have seen people buy with a sibling. We've had them buy with a parent. We have them buy with a family member. We actually can see them buying with a roommate, right? As long as that roommate that you're buying with is also going to be a first-time home buyer and intends to occupy the property as their primary residence, we will allow them to be a non-spouse co-borrower on this program. Now, I won't spend too much time on the FHA, even though I called it sensible. We have suspended the down payment assistance component for this program. And of course, we want to get more information about how our buyers can benefit from the down payment assistance that Mass Housing has to offer. So I'm just going to slide out this Mass Housing FHA for now, but just do know that we have FHA, but it's a true FHA loan, meaning that it's not Mass Housing's mortgage insurance, it is FHA's insurance. Now, I know I've talked a lot, so now let's go over some examples that will bring what I've spoken about more into light. So this is a listing that I actually pulled from the internet. It's an active listing. It's at Malden, Massachusetts. It's for a condo. The purchase price is $174,900. Now, what we will do if if the borrower is tapping into our down payment assistance is that the first loan to value has to be at least 95%. It can be higher than that. So 95% will be the loan to value. So that amount is $166,155. So the smaller loan is going to be at 5% or $15,000. Now, whichever is less. Since the purchase price is $174,900, whichever is less is $8,745, which is the 5% of the purchase price. That amount is $8,745, and it comes at a 0% interest. So this will be the breakdown for this borrower. Their principal and interest is $701. Their taxes come to $207. Their HOA is $200. Now, remember that under the Workforce Advantage, Mass Housing is picking up the tab for the mortgage insurance. That amount corresponds to $3,190.18. So in total, this borrower is going to get $11,935 from our down payment assistance and an amount that is not coming from that. Now, bear in mind that for any of our down payment assistance, there is no asset or needs test. So if the borrower has, I'm going to exaggerate here, $1 million in their account, as long as their profile fits under our criteria, they can still qualify for our down payment assistance. We also don't have any assets reserve test. So even if they have whatever amount they have, they can use that or add that to this loan amount. So it doesn't always have to be a 5%. Maybe they're using 5% of our funds. They had already saved at 5%, which means their loan to value will now be at a 90%, which is fine with Mass Housing. The other example is also a condo in Malden. Now, if you remember, I mentioned, I may not have mentioned that, but Malden is also a gateway city. So let's go over this example. This is a purchase price of $499,900. 95% loan to value is going to be $474,905. The 5% that we need for the second is $24,995. Again, if you remember correctly, the gateway cities get as high as $25,000 down payment assistance. So for this purchase, the borrower will pay nothing on a monthly basis for the second. The principal and interest is $2,002, and I'm using an arbitrary interest rate of 3% just for the purpose of this analysis. The taxes comes to $441, and these are true actual numbers that I got from the listing. The HOA is $200. Again, because Mass Housing under the Workforce Advantage is paying for the mortgage insurance, that amount is $9,118.18. So in total, the borrower stands to gain as high as $34,113.18 if they fit into the Workforce Advantage. So now you're probably saying to yourself, well, of course, these are listed, but let me see you show me something that has actually worked with Mass Housing, a loan that has been purchased by Mass Housing. Well, ask no more, because here we have it. This is an example for a Mattapan, Massachusetts 2-unit that we actually bought that I pulled from our pipeline. Now, if you remember, I mentioned that under our Mass Housing Mortgage Conventional, we have carved out an exception for a borrower who is hoping to qualify for our down payment assistance, is also buying in a gateway city, but whose income exceeds the income under the first-time home buyer conventional loan. So I'm just going to take you back to the page where we have the first-time home buyer conventional. We all know that Mattapan is in Suffolk County. The cap under the first-time home buyer conventional is $113,300. Here you have a borrower whose income, let's say, is $130,000. That exceeds the cap for the first-time home buyer for the county of Suffolk. Now, what we are doing, or what I'm saying, is that we will allow the borrower to go as high as $153,900 for Suffolk County if the city they are buying is also a gateway city. So trust me when I say that Mattapan is actually a gateway city. So this is how the loan will work. The purchase price was $650. So the 95% LTV is $617,500. Now the 5% that they would need is $32,500. But remember that for our multifamilies, we need a 3% borrower contribution requirement. For a single family or condos, there is no borrower contribution requirement. So the entire 5% can come from Mass Housing for their single family or condo. But when they're buying a multifamily, we want to see a little skin in the game. So we do require the borrower to have 3% of their own funds. That amounts to $19,500. So of the $32,500 that they need, $19,500 should come from them. They would need $13,000 to make up for the 5%. And if they did that, they would still be left with $2,000, which they can apply towards their closing costs. We are not going to allow them to walk away with money from the table, but bear in mind that whatever money that they put up front for earnest money deposit, they will get the refund back if they do use and qualify for our down payment assistance. So this is the breakdown of what it will look like. The principal and the interest was $2,561. I mentioned that the principal and interest on the second is a payment that the borrower will make on a monthly basis. That equates to $96.53. So in total, inclusive of the mortgage insurance, is $3,382.79. And this will allow the borrower, and in this case, the borrower's income was $120,000 before we were even able to add the 75% of the rental income. But because they were buying in a gateway city, they had up to $153,900 for the county of Suffolk. And so they were able to do this. Now, earlier, I did mention that Mass Housing was also a mortgage insurance company. Now, we are the only housing finance agency that has a mortgage insurance program that actually benefits the consumer. With our mortgage insurance, the borrower can either make a monthly MI, or monthly mortgage insurance, or a single premium. Okay, now the benefit that we have for them, which we call the MIPlus or the mortgage protection plan, is that if the borrower has a Mass Housing loan with mortgage insurance, should they lose your job, Mass Housing steps in and pays up to 6 months of their principal and interest. The benefit is prorated. So if the borrower A's income was 60% of the total income used, and borrower B's income was 40% of the income used, if borrower A lose your job, we pay 60% up to $2,000. If borrower B lose your job, we pay 40% up to $2,000. Now, we all know the environment that we are in. There are times where two of the borrowers are losing their job. In those instances, we are paying up to the maximum $2,000 for their principal and their interest. Now, since March of this year, we have paid over $1 million in benefits on behalf of these borrowers. This is a free benefit. They do nothing, and I hate to put it this way, they do nothing but lose your job, which sounds awful. But when they lose your job, we are able to step in and pay and help them pay their mortgage. In that way, we're also helping them to sustain their home and not worry about losing their house when they also lose their job. I won't spend too much time on this, but this is also something that you can keep at the back of your mind. We have a renovation option that will help. We all know the environment that we are in with the lack of inventory. So there's a chance that a borrower might find a home that needs some TLC. We have a renovation feature that will help them to fix up the house and also help them to get the end loan. It's a seller's market. This is probably not going to work right now. However, if you have a borrower that is buying from a family member who is understanding, this might be an option that you may want to consider. So I know I've done a lot of talking, but I do want to say that it's been a pleasure being able to present to you. We would like to know what you think as real estate professionals. What do you think the first-time home buyers that you work with, what are their needs? What is the biggest obstacle that you see going out there for first-time home buyers? What would you like to see Mass Housing offer or do? Now, we would like to present for your office if we have that opportunity. We do collaborate with a lot of loan officers. So if there's one that you work with that is also approved with Mass Housing, we can arrange to provide this presentation in as much detail as you want in your office. Of course, with where we are right now, it will have to be a virtual class, but we are more than happy to do that. This is the business development team at Mass Housing. We work as a true team. So if you have any questions, you can feel free to reach out to any one of us. Now, we encourage you to go to masshousing.com and sign up for our newsletter. One thing I like about Mass Housing is we are always coming up with creative and innovative ways of helping first-time home buyers. If you sign up for our newsletter, you'll be one of the first to know anytime we have an update or an announcement on our program. You'll be one of the first to know. These are some of our valued partners across the state that we work with. And that concludes this presentation, but I want to thank you so much for your time. I want to thank G-Bar. I want to thank you, Dino, for giving Mass Housing this opportunity to present before these real estate professionals. Of course, Jen, thank you for all your efforts in making this a show. Thank you.
Thank you, Natasha. You're not going anywhere. We have lots of questions, but thank you so much. This was awesome. I mean, it's like unbelievable. Everyone on this call should go sign up for the Mass Housing newsletter. I'm going to do that as soon as we're done. Thank you. So looking forward to some questions because this is awesome stuff. And I think we really need to know about this. So thank you for pulling back the veil for us.
Absolutely.
So I'd like to really quickly introduce Eastern Bank, one of our sponsors. For a few years now, Eastern Bank is very generous with their nonprofit arm. I've actually experienced it with some other nonprofits myself. So thank you, Chip Coveney. I'd like to welcome, he's the Senior Vice President of Mortgage Sales, and the floor is yours.
Great, Dino. Thank you so much for that kind introduction. I am thrilled to be here on behalf of Eastern Bank, especially after listening to that tremendous presentation by Mass Housing. As Dino mentioned, I'm Senior Vice President in charge of coordinating all mortgage sales activities and sales initiatives for Eastern Bank throughout Massachusetts. I'm truly excited to be part of today's presentation / discussion because first-time home ownership, affordable home ownership, and equitable home ownership are pivotal initiatives facing all of us in the housing industry across the Commonwealth. Mass Housing and MHP have been leaders and continue to be leaders to enhance the opportunities in what many would say is an affordable housing crisis in our state. I know we will all walk away from today's event empowered to assist more individuals as they try and navigate the challenging landscape of cost-effective home ownership. For those of you who may not be overly familiar with Eastern Bank, we're a community bank that began locally in 1818. And today we have a footprint stretching from Cape Cod right through Boston, all the way up to southern New Hampshire. We have a full array of consumer products and services in addition to residential lending, including retail banking, commercial lending, small business banking, wealth and asset management, and one of the largest insurance companies in the country. We have been long known for our focus on employees, our customers, and communities we serve. This is clearly demonstrated, as Dino mentioned, by the ongoing efforts of the Eastern Bank Charitable Foundation and the commitment of our employees to volunteer and give back. Our foundation supports and advocates for many causes throughout the communities we serve, including safe and affordable housing and other areas addressing economic inclusion and mobility. Earlier, Melvin articulated several powerful comments on behalf of your DE&I committee. Likewise, Eastern is deeply committed to building and sustaining a diverse workforce reflective of the communities we serve, where we all feel included and supported. And this was something that was recently highlighted by a Wall Street Journal article. DE&I is a critical aspect of our work and workplace because we believe it makes us a better employer, a better provider of our services to our customers, and a better member of our communities. I am proud of Eastern's longstanding commitment to DE&I and at the same time of our recognition that there's always more to do and more to improve. The mortgage sales team that I am privileged to work with spends countless hours with local nonprofit counseling agencies, CHAPA, the City of Boston, the Federal Home Loan Bank, in conjunction with the teams at Mass Housing and MHP, which we'll hear from shortly. To be successful at CRA lending often involves being passionate about affordable housing. And you have to have a team, in my opinion, that shares this passion. Realtors, lenders, community organizations, governmental organizations, closing attorneys, whoever will engage. This passion turns into persistent action, first-time homebuyer programs, continual enhancements at Mass Housing and MHP, as we're hearing about as we speak, to meet the demands of the market, and local lenders like Eastern Bank, who are truly invested in the communities which we serve. In closing, I thank you again for the opportunity to be a sponsor at today's event, and I look forward to many of you coming alongside the wonderful teams at Mass Housing, MHP, and Eastern Bank. Thank you again.
Thank you, Chip. Thank you, Eastern Bank. Appreciate your support. Transition over to Massachusetts Housing Partnership, aka MHP. I'd like to introduce LaQuisha Burke, a program associate. She's responsible for supporting a wide range of operational ranges for One Mortgage. She works with partner lenders on loan funding and assists in the management of One's post-purchase counseling program called HomeSafe. LaQuisha supervises the collection, tracking, and archiving of loan documents and works with first-time homeowners when they refinance their One Mortgage loans. MHP works with communities to create innovative policy and financing solutions that provides affordable homes and better lives for people in Massachusetts. MHP is a statewide public nonprofit organization that supports finances for affordable housing. Thank you, LaQuisha, and welcome.
Oh, thank you, Dino. Oh my God, that entrance was just like super awesome. I kind of did it better myself. So thank you guys for having me. And I just want to say I'm happy to be an affiliate of GBAR and super excited to have MHP be involved with GBAR in this upcoming year to help us with our initiatives of definitely pushing home ownership, definitely to the people who need it the most. So I'm excited to be here today. I'm going to talk to you guys about the One Mortgage, and I will add in a couple tidbits about the MIPlus Boston program as well, as I know a lot of people are really interested in the MIPlus Boston, which is our one of our newest programs that has helped people to purchase within the city of Boston, Boston residents buying in the city of Boston. So excited to be here, and I'm just going to go ahead and get started. So, I really appreciate this opportunity. So I can share my screen. All right. So again, my name is LaQuisha Burke, and I am a program associate on the homeownership team for MHP. And I have essentially been there for about 4 years. And one of my biggest goals is to get people into homeownership. And I understand how difficult that can be for the average person to even get a home or even save up down payment. So we look for the One Mortgage to actually help to assist in this dream of people actually being able to purchase a home. So we'll just get into it. So I'm going to talk to you guys about the One Mortgage for your first home. And again, I'll add in some tidbits about the MIPlus Boston program as well. So in regards to the One and the MIPlus Boston, you want to know what it is. As I explained, it's a program, it's a mortgage program that actually helps to get people into home ownership who otherwise would not have the chance and the opportunity. So it's usually people that fall in a lower to a moderate income that we would like to assist. And even if we can get people like in at a 40 or 50% area median income, that's what we would like to do. But again, this program is there to assist people who need it the most, and it's Massachusetts' most affordable mortgage. So we'll go ahead and get into it. So in regards to the One and the MIPlus Boston, so the two distinctive differences between these two programs is that the one mortgage you can use anywhere throughout the state of Massachusetts, whereas in the One Plus Boston, it's only for Boston residents that currently live in the city of Boston and is purchasing in the city of Boston. And they will ask you for some additional documentation to prove that you're an actual resident. And some of those items could include a current lease, a current utility bill, or your voter registration card that they would collect from you. Also, with the One Plus Boston, another caveat is that you cannot have already had a PNS signed. So essentially, if this person is already, went to a bank and got a conventional loan, and now they're like, oh, I want to get on with the One Plus Boston, they've already signed their PNS, then they would not be able to apply with the One Plus Boston because clearly they may not need the assistance that the One Plus Boston is offering because they've already basically been approved. So why should you choose the one mortgage? And we're going to go over these in detail, and feel free to put your questions in the chat, and we'll definitely get back to those, towards the Q&A towards the end of it. So some of the benefits of the one mortgage is that we offer a low interest rate. We have a low down payment. There's no PMI, which is great. And if you guys don't know what PMI is, it's private mortgage insurance, and that can cost the borrower, as you know, a couple extra $100 on top of their mortgage every single month. But with the one mortgage, there's no PMI. And also for borrowers that fall below a certain income guideline, they can qualify for financial assistance from MHP in the form of a subsidy. And we'll get into more of that as the presentation goes on. And again, these benefits are going to apply to the One and the One Plus Boston. So the benefits are the same. There's just some slight differences, and I'll point those out as we go. So for low interest rates, so how the one mortgage works. The one mortgage will always have a 30 basis points off of the national standard. So let's say today's national standard was 2.65. The one mortgage will be like a 2.35. When we're looking at the One Plus Boston, it does have a deeper interest rate discount, anywhere from 50 basis points to 100 basis points, which again, if it's a One Plus Boston, it'll be a 2.15 to a 1.65. So again, that's the difference of the national standard. 50 basis points off the national standard or 100 basis points off of the national standard. And those are the discounts that you would get with the One and the One Plus Boston. The reason why the One Plus Boston interest rate discounts are so deep is because the prices in Boston are so extremely high right now that these people would need a higher assistance of down payment, which we have connected with the city of Boston in order to help with the assistance of some down payment. And I'm actually going to show you an example of one of our recent purchases that somebody just did in Boston with the One Plus Boston later on in the presentation. But again, the distinction between the One and the One Plus is that the One has a 30 base discount and the One Plus Boston has a 50 to 100 base discount. Again, One Plus Boston is only for Boston residents. The one mortgage you can use anywhere throughout the state of Mass. So, low down payment. So how down payment works. Again, this is the same with the One and the One Plus. Borrower can buy anywhere from a condo, single, or two family. And with that, we would ask for a 3% down, where 1.5% has to be their own funds. Unfortunately, we do still ask for the borrower to have a little bit of skin in the game. And what we mean by their own funds is that it has to be seasoned money that comes directly from the account. It can't be in like somebody else's account, like my mom is holding my money for me or anything like that. It has to be directly in their account that they use with nobody else's name on it. The other 1.5% can come from any kind of down payment assistance program that might be available. Again, when we're looking at the One Plus Boston, they have some down payment assistance that's offered through the city that assists with this particular program. When we're looking at 3-family houses, we do ask for a higher down payment, which is a 5% down, where 3% has to be the borrower's own funds. The other 2% could come from any kind of down payment assistance program, a gift from a family member, things of that nature. And you can use it in conjunction. Again, if the borrower has their 3% and their 5%, they're more than welcome to just move along with their process. And these low down payments are going to be the same for the One and the OnePlus Boston. So no PMI. So most of the time when people do not put down, again, the 20%, or they have a very low credit score, there can be different issues on why they would add this PMI onto somebody's mortgage. But essentially with the One Mortgage, we do not require them to have PMI. And the reason why they don't have PMI is that MHP actually covers that for you. And it's called a loan loss reserve, where we put aside 1% of the loan in case the borrower was in default. And we will use that to cover the lender in case the borrower was in default on the loan. So again, there's no PMI with the One Mortgage or the OnePlus Boston program, which is, again, fabulous. It saves you thousands of dollars over the life of your loan. Because essentially, as we know, sometimes people just have enough money just to kind of get into the property. And then now, they might have been banking on and spending like $1,300 a month with their taxes and insurance. And now their PMI is costing them an extra $250 to $500 a month. And, that we know can become a financial burden and definitely cause more problems down the long run, causing a default on the loan and different things of that nature. Okay. When we're talking about subsidy funds, so like I described earlier, if a borrower falls below a certain income guideline, they can qualify for a subsidy funding. And that's usually around 80% of the area median income. And we will follow the HUD guidelines on the income. But yeah, they will get the subsidy for the first 7 years of their loan. And essentially, it's a 0% interest loan. And they do have to pay it back upon selling or refinancing of the property. However, we do offer subordinations, which basically says, hey, can I pay you guys later? Because I need money to do X, Y, and Z. So they do have an option of just like at least doing one refinance and pulling money out, or doing what they need to do, and then going on from there. The borrowers can receive up to about $12,000 in financial assistance. That's my boss. Okay. Sorry about that, guys. So the borrower can receive up to about $12,000 in assistance from MHP. And the reason why the subsidy is actually really good is because this helps to increase their purchasing power. So essentially, if the person originally was only qualified for maybe like 350,000, maybe now they qualify for like 375 or maybe 400,000 because they're receiving these extra funds from MHP. And I'll exactly show you how this actually works out. Okay. So property inspections, we know that, the property must be inspected, you know what I mean? But with the One Mortgage, we actually don't require the property to be inspected. However, just because we don't require the property to be inspected doesn't mean that you don't let these people get their property inspected. It's always a great idea, or definitely you should make sure that you get your property inspected. You don't want to make sure you're buying a lemon or buying something that, the borrower is going to be dumping a bunch of money into, which they really can't afford possibly. So definitely get the property inspected, but it's not something that will hold up your closing or anything like that with the One Mortgage if it hadn't happened as of yet. In this particular example, we just like to show how the One Mortgage compares to a regular conventional loan. And we do have to add in some OnePlus Boston stuff in there. But so in this particular example, it's a conventional loan. It's about $300,000. The down payment is $9,000. The interest rate for the conventional is 4.30, whereas in the One Mortgage, it's only a 4%. Both of these are going to be 30 years. The conventional loan, the payments are definitely higher, $2,134 to the One Mortgage of $1,706. And then the breakdown happens like $1,440 for the principal and interest, $1,389 for the One Mortgage. Whereas in the property taxes are the same, homeowners insurance, $88 to $82. Whereas in the conventional loan is getting added on the private mortgage insurance of $254. The one mortgage, there's no private mortgage insurance. So they're already saving money there. And also with the conventional loan, there's no subsidy. So this person didn't qualify for any extra funding that can help them at the beginning of their loan. With the one mortgage, they qualify for $123 a month, therefore saving this borrower about $427 a month. So that's like fantastic and definitely something that can help the borrower over the life of the loan. I'm sure they can use that $400 to buy paint or buy something to like upgrade their house or something like that. So definitely these savings are major for the borrower. So we want to make sure that you know, the borrower gets a good start from the very beginning, and that's what the one mortgage does. So just in regards to the subsidy rate, so when we talk about the subsidy, and that's just that people that actually qualify under that 80% area median income. So just across Massachusetts alone, 60% of our one mortgage borrowers at 80% area median income, where 65% of those fall under the under that 80% area median income will receive the subsidy. And then just in Boston alone, 50% of the one mortgage borrowers are under the 80% area median income, and 74% of those are actually receiving subsidy. So there are a lot of people that fall below that 80% area median income that actually are still qualifying for that subsidy. So that means that MHP, we like to give out money, we like to help out where we can. And again, we're helping the people that need it the most, because if we didn't, all of these people would not qualify for subsidy funding from us. So when we're looking at qualifications, we just want to look at their income. You want to make sure that their assets are good. They're first-time home buyers, and that they meet our credit scores. And we're going to go over a little bit over these, and I'll try to go as quickly as possible because I know we're probably like crunch for time. But when we're looking at household, okay. No problem, Elliot. So when we're looking at household income, our program is actually based upon the area that the borrower wants to live in and how many people they have in their household. So this is going to change from county to county and depending on how many people they have. So just in Boston alone, if we look at it, the max income that they can make is $95,200. If they make under this, then they would qualify. If they made like $85,000, they made, you know, $93,000, they would still qualify. If their income is over that at 102, then they wouldn't qualify. Or even if it's at $96,000, they wouldn't qualify. They are very strict in regards to the income limits. But again, there are a lot of people that fall below this, so they will qualify for the one mortgage. When we're looking at household assets are things that we look at to make sure that, you know, they don't have too much essentially. And we want to make sure some of the asset things that we look at is savings and checking accounts, stocks and bonds, gifted money, gifts of equity, any kind of investments that they may have, or any kind of land that might have been given to them or bequeathed to them. And as you know, the gifts of equity is like, hey, I'm buying my grandmother's house. She's buying it. It's worth $300,000. I'm buying it for $200,000. She has $100,000 in it. You have $100,000 in equity. Therefore, you will not pass the asset test because you're over that $75,000 limit. So you just want to kind of keep that in mind. We also do not count most retirement accounts, but we will count Roth IRAs. So we want to keep that in mind. We will count Roth IRAs, but we will not count most 401ks and different things of that nature. You will want to check with your lender, and the lender will be able to tell you like, hey, if this particular account that you have will qualify or not. Also, we do not count college savings plans. So if the person has money in a college savings plan for their kid, that will be money that we wouldn't count. Everybody must be a first-time home buyer. And what we mean by a first-time home buyer is just somebody that hasn't owned a home for the last 3 years. However, we do make some exceptions to that rule, which could be like a displaced homemaker. That was just somebody that was living with their spouse. They weren't working. They relied on their spouse for income. Now they're going off on their own after a divorce, and you know they want to be a homeowner now. So that also that will be an exception. If they're a single parent, I mean they was living together, they was looking to this again for the spouse for income, and now they're separating, going their separate ways. You have 50% custody of your kid. We would consider you a first-time home buyer if you hadn't owned anything. And also we make exceptions if you have owned a trailer or a houseboat. So if you owned any of these things, we do not consider them real property. So therefore they wouldn't count as a real home. So we will make an exception in this case. This is always the fun part of the presentation that everybody likes to hear is our credit score limits. And I'm always really excited to talk about our credit score limits, our minimums anyways, because these are very low minimum credit scores in order to get people who need this program the most. Our credit scores used to be a 660 to a 680, but we realized that we were missing a lot of people within a certain credit score range. And we wanted to make sure that those people took advantage of our program as well. So we actually lowered our credit scores to a 640 and a 660. So if you want a condo or a single family, it's a 640. And if you want a 2 or a 3 family house, it's a 660. And if they cannot generate a credit score, we will look at some non-traditional ways of looking at credit, which would be like collecting rental, cancel rental receipts, different things of that nature in order to generate a semi-score. It wouldn't be like a real score, but it would be based on a non-traditional status. And we can do that for the borrower as well. Did you have a question, Dino? I seen your light come on. No? Okay. All right. So after the closings, we do require the borrower to use the property as their primary residency. That means they must live on the property for the life of the loan. And what we mean by the life of the loan is just essentially if you decide you want to rent out the property, you got married, you're going on with your husband or wife or whomever, and you're going to rent this property out, we ask that you refinance out of the loan in order to go into a regular conventional loan. Again, the one mortgage is made for the people that need it the most, and we don't really want people to kind of just take advantage of the program in that way. We do get reports every month from the lenders that state, hey, where you're living, different things of that nature. Another requirement after closing is that you take the Home Safe Post-Purchase class within 1 year. And that's just basically like a check-in for you or the borrower, just to make sure that they are okay, if they run into any bumps along the way, and just check in on them of that, offer them resources. They will not re-verify their income. They're not re-verifying their assets. And also they're not looking to limit the equity or the sale price of the home if that's something that's happening at that time. Again, the Home Safe program, some of the things that are included, it's free to all One Mortgage and OnePlus Boston borrowers. It is a program that assists with the post-purchase class, which is what I just explained, and also post-purchase counseling. So that's like, hey, they're running into any kind of issues. They have some questions, they can give them some resources. Delinquency counseling, they're falling behind. Hey, how do I get caught up? How do I talk to the bank? And also refinancing counseling. Again, if your borrower is doing what they're supposed to do, their credit score will shoot up. Anytime they go into the bank will give them whatever they want. But we want to make sure that the borrower knows all of their options before they actually sign off on this new refinance. We want to make sure that they know exactly what they're getting into. They might be 15 years in and now they're going into another 30 year. Is that something they really want to do? Is their interest rate rising? Is that something that they really need to happen? What are they doing the refinance for? So this is not to prevent them from doing the refinancing, but it's just making sure that they know all of their actual options when it comes to that, so that they don't get themselves into any kind of issues. So I do like to go over like just the delinquency and how the One Mortgage actually compares to a lot of different other loans within the state. And as you can see, our delinquency rate as of like December 2020 was at about a 2.43, whereas in all other conventional loans were maybe around like a 3, little under 3%. And then as you can see, the FHA is probably around a 10%. Now, we're not saying that FHA is bad. We're not saying that any other loan is bad. You have your borrower use whatever product that they need to get into a home. But we just want to let you know like how the One Mortgage would look, and that these people actually do have success on actually using the One Mortgage and the OnePlus Boston program. And so if you're just interested to see like different areas that we are assisting people in, this is just with the one mortgage. Statewide, we've done about 506 loans. Households of color is at 63%. People that fall below that 80% area median income, which I said are people that might receive the subsidy, are around 60%. And we're doing about 23% on deed restricted units. So that's the reason why we definitely wanted to get this OnePlus Boston going, because we want people to be able to buy market rate units. And with the OnePlus Boston, they can actually buy market rate units. With the one mortgage, they probably was buying this when the OnePlus just did not exist as of yet. But we do look at our gateway cities and what we're doing in our gateway cities. And again, we want to assist the people who need it the most, which are usually households of color, which have a very low income. And as you can see, we are assisting with the one mortgage a lot of households of color. In our gateway cities alone, we're doing about 79% of households of color, and 59% of those people fall below that area and median income, which again, they will probably be receiving some of that subsidy funding, which is great. And then these are just some of the gateway cities that we actually are looking at: Brockton, Lawrence, Springfield, Lynn, Lowell. Haverhill was a little bit of a surprise for me, but yeah, definitely these cities out here are some of the cities that we've been pushing to make sure that people in those areas are able to buy. So what's the OnePlus Boston stats? So this is just with the OnePlus Boston. To date, we've closed about 40 loans. 85% of those are households of color. 36% are Hispanic or Latino households. 44% are Black household, not Hispanic or Latinx. 15% are white and 5% are Asian. And then down below are just some of the different boroughs that people have purchased in, which are Dorchester and Mattapian and Roxbury zip codes. There goes my boss. He just chimed in. Hi, Elliot. Some of the other stats that I just like to highlight with the OnePlus Boston is that the average income that somebody has is about $74,000. Not to say that somebody below this couldn't get in, because definitely that's just the average. But the average credit score is about a 748. Their DTI is about a 37%. And some of the property types that they're purchasing are condos at 52%, with an average purchase price of $328,000. Single families at 25%, where the average purchase price is $435,000. 23% are two families at $597,000. And their average interest rates are around like the 1.7 range. Again, that's that huge interest rate discount that I was explaining to you guys at the very beginning, the 50 to 100 basis points, which definitely helps this borrower when they're buying a huge property. And I'll show you another stat example of that, and then we're gonna wrap it up. But the average down.
I was going to say we got to wrap it up. Excuse me, we're running behind, so I just didn't want to bother you, but this is all great information.
No. It's totally fine. Let me just kind of highlight just one of our most recent purchases with the OnePlus Boston, because I know you guys are usually interested in this OnePlus Boston, where we had a gentleman buy a 3-family house and he spent about $830,000. He put about $41,000 in down payment altogether, where his portion was $24,000. His rental incomes are $1,900. His credit score was at 803. His income was about $73,000. His interest rate was a 1.25, which is the most exciting thing. And his monthly payments are around $2,600. So this is just an example of how people are really succeeding with the OnePlus Boston within the city. And as you see, we're just kind of picking up the pace as time goes on. And this is next steps. So you guys feel free to use our calculator on our website. You want to make sure you have your borrower take their first time homebuyers class, because that's a requirement. And you can also contact some of our several lenders, which we have over 40 participating lenders that you can use in order to finance your borrowers. And this is just our contact information to, if you have any questions and how MHP can help you in the future. And we're definitely willing to do any kind of seminars or webinars that you may be hosting for anybody within your offices. Okay, Dino, I'm done. I feel pressured.
No, what I should have done was we should have given you guys way more time. This is like unbelievable information. I feel bad that we have to like I mean, we have like a hard stop at 11:30, but this is it's
I know.
valuable information. And so we're going to provide everyone with your contact information. And also all the slides are going to be available online, and we're going to email them to all the attendees. But this is, I mean, I really feel like we don't have enough time. So I'm sorry. I don't even know what to say.
No, it's okay. Are we gonna still do some Q&A or
I
not?
mean, yeah, we have up until 11:30. So I'm trying to furiously write. Jen's helping me get everything together. So if you don't mind, Natasha, if you could come live too, maybe I can just kind of ask some questions as they had come in. So real quick, Annette Reynolds, are the income limits for the household or the borrowers? Example, if an adult child is in the household, is that person's income included in the income limit? So I think a lot of these questions were already answered as we went through the slides. Did you want to just quickly say something about that? Because I know that it is included.
It is included. Yes, it is.
Yeah.
Thank you.
I would say the same thing with MHP. It is included, but if they're full-time, if they're over 18 and they're full-time student and they're working, then we wouldn't look at their income. So if they're full-time, but if they're not, then yes.
Sarah Presti asked, Mass housing loans are available in all towns and cities in Mass or just the gateway cities?
So it is available statewide. The only significance of the gateway city is that's where they get the $25,000 if you're looking at the workforce advantage.
Okay, understood. Silvana Martin Murillo, Mass housing and loans are available to all towns and cities in Mass. Oh, okay, that we just answered that. Is there a requirement for the buyer as to how long they must keep the property?
So they have to maintain it as their primary residence, as long as they maintain it as your primary residence. But similar to MHP, if they were to want to buy something else, they will have to refinance out of that loan.
Okay, thank you. Immediate past president, Jason Gell, homeowners association, homeowner occupancy requirements, do they vary for condos? Anyone?
I'm not sure I understand the question.
Oh, so when it comes to the homeowner association occupancy rates, if that affects loans, because some standard lenders will have, it has to be, 51% owner occupied.
Yep, it has to be 50% owner occupied. 50%.
Oh, so it does have to be 50%?
Yes.
Okay, that's interesting. Let me see. So
we would follow Fannie. Same as Mass housing. Okay. Same as Mass housing. We're the same as Mass housing.
I have a couple of questions that are sitting in the question and answer box.
Yeah, Melvin, you want to take those?
Yeah, Melissa Mills. So if the buyer has a multifamily and tenant loses their job, there are funds available for the homeowner?
Not where the tenant loses their job. This is something that goes with, it follows the borrower or the homeowner. Yeah. So
perfect.
For the homeowner. Yep.
Julia Jenkins, about the One Program product. Are there many of these offers? Do many of these offers get accepted? And can the offers have 20% down? And also the question is, does the buyer only have to have 5% down? I know we kind of answered that question. Lakeisha also talked about the down payment, but can you just reiterate, can they have 20% down? Can they have 5% down? Can you just go over that real quick?
Yeah,
so
definitely.
Lakeisha, let me just say that I read that question, Melvin, and I think it does have to be, it has to do with the competitive nature of the market and being competitive with standard loans versus like if, people are losing transactions offers with 20% down, how competitive can we be with an MHP loan at 5%? I mean, I guess it's a tough market out there. And I think, we have to provide our clients with options, but I mean, that was the gist of the question, was the competitive nature.
Yeah.
Sorry, go ahead, Lakeisha.
No. I would say like when it comes to you having a one mortgage versus a conventional or mass housing, like definitely it gives you a chance to, get in the game, so to speak. But we can't control if somebody's gonna say yes or no, to your offer. And if somebody comes in with like, $50,000 in cash over asking price, and if that's what the owner wants to kind of go with, and that's what's been kind of happening. You know what I mean? It's been a little bit crazy nowadays, but definitely with the One and the One Plus Plus, and it definitely helps you to have a competitive nature. It actually gets you into the game where, so to speak, before you wouldn't have been able to. It would have been like a, deed restricted unit. You know what I mean? And they can put down however much that they want. They can put down 20% if they want to, but however, if you just put down the 3 or the 5%, you have that extra money left over for them to do any kind of repairs or upgrades once they go in. But I mean, again, that's up to their decision, but it's not a requirement for MHP or the One or the One Plus.
Can I put something on that as well, just so you all
Yes.
know on this call? It's important that they're doing this and teaching this program, because I've been teaching this first-time homebuyer program for 19 years. And the fact is that the one program is a very important program, which used to be called the soft second program,
Yeah.
which then they merged over. So my point is, if the older realtors who are on here hear about this, it's the same exact program, but they changed it to the one program. This is just for you realtors to understand that when you see this come across your table, you don't turn the other way and look another way. This program is just as viable and can get the loan closed. And there are valuable, educated people. And as you see the staff behind it, they have people that understand how to make this program work. So I appreciate every one of you all tuning into this call and understanding it. But it's important that you understand, if you see a one mortgage FHA, they can get done because there's people behind that understand how to do it, and especially the one program. So anyway, that's all I wanted to leave.
Thank you, Melvin.
That's awesome.
There's
Angela, you're
also
on mute.
another question. One other question. Go ahead, Angela. You want to say something?
Angela, you're on mute.
You're on mute, Angelo.
For it to come off. I just wanted to make a comment about leveraging all resources that are available, because there are many cities and towns that have other resources and down payment and closing cost assistance. And we allow all of those assistance programs to be leveraged along with mass housing. So when someone is bidding, they have that option to utilize the mass housing resources as a closing cost and or down payment assistance. So that may give them a little bit of an aid and bump in that negotiating piece.
And Dino, if I could just jump in, one thing I just wanted to reiterate in this competitive market, not only is it paramount that we educate just buyers in general, but certainly first-time home buyers. And, to Lakeisha's comments and others, we want these buyers to be competitive in their offers, but at the same time, this came up at a consortium just a couple of weeks ago. Is it wise for a first-time home buyer to go above that asking price? And when you have a team, a passionate team that's advising these borrowers, I think that's the best way that, number one, they're prepared to go into that offer process with the right expectations.
Exactly. I think that's all the questions, right?
I'm just going through we kind of answered them. Hopefully, let me see here. The credit score we answered. The income goes up.
Is there a discount mortgage rate through mass housing?
Yeah. There's that a question? Go ahead.
Yes. So especially with the Workforce Advantage, is always going to have a better pricing than any of our other programs. But even with a first-time home buyer, the rates are discounted.
And then the one other one is the student loan. How does that qualify for a mass housing loan?
So we follow Fannie and Freddie's guidelines on that.
Yeah, us as well. And I know like right now during like COVID, there's been like different issues going on where people are like deferment or whatever, but I do believe that they are looking at if they had payment plans in place before the deferment. So
the one other question, which I love, and this has happened, what happens if their income goes up once they've bought the property? Or a matter of fact, what happens if their income goes up while they're in the middle of buying the property? This has happened to me.
yes, I have seen that people fall out of the one mortgage if their income did change from like the pre-qual to the day of the final app. If things have dramatically changed and they go over that guideline, then yeah, they can fall out of the one mortgage or the one plus and at times, unfortunately. But yeah, but if they start making more money after they have purchased a house, they closed, and now they're making $100,000 a year, then we would not be coming back looking for any kind of money. That would be just great for them. They're building wealth for themselves, and that's the goal of our program, is to make sure that they're building wealth for themselves and their families. So we would not be looking for any extra funding at that point in time.
So with mass housing, the great thing is because we have 3 different programs, so hopefully if they fall out of one program, they will fit into the
Yeah.
next one. So that's the benefit of that.
Awesome.
Perfect.
All right,
Thank you.
guys. Well, again, all the slides are going to be sent to everyone that registered. We're going to have the replay of the Facebook Live because this was live. Thank you, Caddick, Eastern Bank, Mass Housing, MHP, all of our amazing, wonderful presenters. This was invaluable. We really appreciate your time. Our members love you guys. You will probably most likely be hearing from our members. Thank you so much. All the members on this call, go onto the GBAR calendar right now. Sign up for March 25th, April 12th, April 21st. We're going to continue down this road. Thank you. Have a great day.
Thank
Thank
you,
you, Dino.
everyone.
Appreciate you
Hey,
guys.
thank you for having me. Thank you.